Module 1, the consultant in the middle. Imagine the first week of a new assignment. Experts are booking travel, the implementing agency wants an inception workshop, and someone asks you when the first invoice will be paid. The fastest way to make a mistake at this point is to think of the project money as one pot controlled by one person. It almost never is. On most development-financed assignments, 3 parties shape the financial work. First is the funder. The funder provides or administers financing and may set rules about eligibility, procurement, reporting, integrity, and disbursement. Its role depends on the arrangement, so do not assume it approves each transaction directly. Second is the government side. The borrower, executing agency, implementing agency, project management unit, or a combination of these. The government owns the public project and often controls approvals, project accounts, counterpart contributions, and certification processes. Third is the consultant, your firm and team. You provide the agreed expertise and outputs. Depending on your contract, you may also incur reimbursable expenses, organize activities, support procurement, manage an advance or float, or prepare claims. You may facilitate a process without having authority to approve or spend in your own name. That distinction matters. Your first job is to separate 2 financial responsibilities that are often blended together. The first is your firm's commercial position. You must deliver the contracted scope, make valid claims, track what has been billed and paid, protect cash flow, and avoid working beyond contractual authority. This is about your firm's revenue, cost, and risk. The second is the project control role. Where your contract assigns it, you may help the client run activities, maintain records, coordinate procurement, or account for project-funded resources. This is not permission to treat project funds as your firm's money. It is a duty to follow the authority, approvals, and control process assigned to the activity. Here is a practical tool you can use on day 1, a project money map. For every important payment stream, write down 6 answers. What is the source of funds? Who has authority to approve the commitment? Who makes the payment? Who checks or certifies it? What evidence is required? And who receives the goods, service, or money? Apply that map to your consultancy fee, reimbursable claims, any advance workshop spending, equipment purchases, and counterpart contributions. If you cannot answer one of the 6 questions, you have found a risk that needs resolving before money moves. For example, a workshop may be funded from a provisional sum in the consulting contract, but the implementing agency may need to approve the activity plan. The consultant may only be allowed to procure the venue after written clearance, and the project unit may need to certify the documentation before reimbursement. The consultant can be responsible for organizing the file without being the person authorized to approve every decision. That is why the client told us to do it is not a complete control. Ask, who is authorized, what did they approve, and where is that approval recorded? Checkpoint. Before you commit a cost or promise an activity, can you explain the money path from source to recipient and the evidence that closes the loop? If not, pause and clarify. Your action after this episode is simple. Create a 1-page money map for your current assignment. Give it to the team leader and finance focal point for confirmation. It will make every later module easier. Next, we turn to your own contract, the document that decides what you can claim and the proof you need to claim it.